Hey YouTube, what's happening? Chris here. I want to bring you guys an update on something I was studying today. I was going over and just digging through my books, and I wanted to share it with y'all, especially the people who really like these tutorials and are learning a lot from them. I love teaching you guys. Obviously, I love teaching myself this stuff, and all you guys who have a passion for this, I'm so excited to be here with you. So if we could, like, subscribe, hit that notification bell. We're trying for 100 likes on these tutorials. You guys have been doing awesome for me, killing it on each one of these tutorials. We've been able to hit that 100 likes, so that's awesome, and you're helping spread them to other people who can really use them and enjoy them. You know, guys, when I got into this, I didn't know anything. When I got into cryptocurrency, I didn't know anything about any of these, Japanese candlesticks, chart patterns, or anything like that. And I just really started to dig into it, and I fell in love with it. And I feel like the Japanese candlestick charting patterns and techniques is one of the best things that you can learn in terms of charting. So what I'm going to do for you, we're going to talk about the Harami or Harami cross today. I call it Harami cross, guys. It can be pronounced both ways. It's Japanese. It means pregnant woman in Japanese. So obviously it can be pronounced however, but guys, this is the Harami cross, and what I'm going to do, I'm going to talk about, I'm also going to read out of my book, Candlestick Charting Explained, Timeless Techniques for Trading Stocks and Futures. It's by Gregory L. Morris, and it has about 250 different Japanese candlestick charting techniques and patterns in it, and I wanted to share that with you guys. So in terms of this bullish Harami cross, so there's a bullish Harami cross and there's a bearish Harami cross. The bullish one obviously takes place at the bottom of this chart pattern, and the bearish one would be up at the top. So after a strong uptrend, you would see basically this at the top, but there'd be a green candle here, and then you'd see the cross. And I'll do another video on that. Today we're just going to cover the bullish Harami cross. So we're having a downtrend. We're getting pushed to the downside, and you see this long day candle right here, this long body. What you see the following day is a doji. And what a doji represents is a stalemate between the bulls and the bears. Alright, so it's been pushed up, it's been pushed down, and it actually closed basically at the same spot right here. And that's what you're having. So that's a fight between the bulls and the bears, a complete dead stalemate. And what you have after that is follow through to the upside. You see this green candle? Typically when you'll see this Harami cross at the bottom of a pattern like that, you want to wait for confirmation for the next day, a nice green day, then you know that the bottom was put in and there's probably a further uptrend going. I like to wait for confirmation. The book says here you don't necessarily have to wait for confirmation, but I do. I just do that just in case, because you can always have this doji here and then you can have another day that looks like this the following day. So you always want to look for that confirmation. And what my book says about the Harami cross is confirmation is not required but recommended. Commentary: the Harami pattern consists of a long body followed by a smaller body. It is the relative size of these two bodies that make the Harami important. Remember that doji days, where the open and the close price are equal, represent days of indecision. Therefore, small body days that occur after longer body days can also represent a day of indecision. The more the indecision and uncertainty, the more likelihood of a trend change. When the body of the second day becomes a doji, the pattern is referred to as a Harami cross. With the cross being the doji, the Harami cross is a better reversal than the regular Harami. So a regular Harami, what you'd have is a candle like this, and then you'd have a small body candle in here. A lot of the times it'd be green. It can be red for it to qualify, but you just see a small little short day candle right here. But this Harami cross is actually more powerful than what a normal Harami is. The rules of recognition for this: a long day occurs within a trending market, so that's what we have here, this your long day. Number two, the second day is a doji. Open and the close are equal. So that's what right here, this is our doji candle. Third, the second day doji is within the range of the previous long day. So you see how it's kind of in the middle of this body right here? So this is your body, and then there's your cross. Then my book says scenarios and psychology behind this pattern, why this pattern happens. The psychology behind the Harami cross starts out the same as for that of the basic Harami pattern. A trend has been in place, well, all of a sudden the market gyrates throughout a day without exceeding the body range of the previous day. What's worse, the market closes at the same price as it opened. Volume of this doji day also dries up, reflecting the complete lack of indecision of traders. A significant reversal of trend has occurred. So think, guys, you're having these, this is where the close is here, then you're having a close here, close down here, and then all of a sudden you're having this doji right here, and that shows that the selling is stopped basically, and you're just seeing that infighting back and forth to see if we're going to drop lower or if we're going to have that trend reversal. And remember, trend reversals happen from short term, then intermediate term, then long term. It has to start on that short term, which is very, very important. The next one, it says pattern flexibility. The color of the long day should reflect the trend. So that's this one right here. Trend is down, so it's red, so that's perfect. The doji can have an opened and a closed price that is within 2 to 3% of each other, and only if there are not many doji days in the preceding data. So you don't want many of these doji days around this Harami cross, just so you know. And the pattern breakdown, so basically the breakdown of this pattern equates to what it says in my book is the equivalent of a hammer candle. And I'll do a video on a hammer candle as well. You guys can research a hammer candle. But basically this Harami cross breaks down to the same thing as what a hammer candle would be. And it says the bullish and bearish Harami crosses reduced to single lines that support their interpretation in most instances. The body of the single day reduction can be considerably longer than what is allowed for a paper umbrella or hammer line candle. The fact that the breakdown is not contrary to the pattern is supportive. So guys, this is what you want to look for, is this Harami cross at the bottom of downtrends. All right, remember, it has to be in this downtrend. This isn't something that you're looking for if you're moving sideways in some type of consolidation or anything like that. This is, you're looking for this at the bottom of that downtrend, even in the short term, but you'd want it more so almost on like that 1-day chart. If you can see this on the 1-day chart, it's going to be much more powerful than if you saw it on like a 1-hour chart. A lot of people don't understand that. You know, when I chart, I like to go through the 1 hour, then I'll go to the 4 hour, then I'll go to the 8 hour, the 12, and then I'll go to the 1-day chart. And that's basically how I work. And I'll pay attention, obviously, to the candlestick patterns that are taking place, the moving averages, support, resistance, trend lines, RSI, MACD, volume. Those are my main things that I want to study, that I want to look for, that I want to pay attention to. So, guys, tomorrow I'm hoping that I'll be able to get out the bearish Harami. So that's going to be talking about this pattern at the top of an uptrend and the difference between that and this one here. But this is the bullish Harami. Guys, really study. I'm so proud of each and every one of you who's really putting in a lot of work and studying and wanting to hear about these different candlestick patterns and who likes all these videos. You know, I couldn't do this channel without you guys. It wouldn't exist. So you guys really are the heart of the channel, especially the people who are watching this. You guys are my favorite to work with. So God bless each and every one of you. Leave it down low if you've ever seen this pattern before, if you've heard of this pattern, if you've used this pattern, and we'll just continue to learn together, guys. God bless each and every one of you.